How you doing? I'm Sean Crawford. This is Surviving the Crash, the University of Wealth. And today we're talking about investing and diversification. So basically, there's making money and then there's what you do with the money that you make. And you want to be in a situation where the money that you make at your job, you putting it into some type of vehicle where it's going to grow. You can trust your money to your job in some type of 401k plan that's kind of like passive, but you want to be more strategic and active because at the end of the day, you're responsible for what happened to your money. And if them people steal your money, which they be doing, it ain't really nothing that you can do because you put it in their hands. So you want to be in the situation where you're financially astute enough to know how to get your money, how to put it somewhere, and how to grow it so that when you older, you can get to a place where your money working for you and you're not having to work for your money no more. So let's get into it. Investing in diversification. Inflation is the word that I want y'all to like get stuck in your head because basically inflation is kind of your money losing value. And basically it's every year the price of things go up. So that means the purchasing power of your dollar goes down. And that's what basically inflation is. Its prices are increasing. And we'll talk about that, why that is in another video. So if you got $100,000, which is kind of like the amount of money that we're going to use today, and you just don't do nothing with it. Okay, I made $100,000 and you just hold it and put it up under your mattress like, my homeboys used to do. Then every year, the value of that $100,000, the purchasing power of that $100,000 is going to go down. So it's not really worth $100,000 even though you got $100,000 because what you could buy with it last year, you can't buy as much with it this year. And over time, that eat at your money. It's like moths. Having moths in your closet and they eating at your clothes every year while they in there. Okay, it's like an old school reference. So basically, let's get into it. All right, you made $100,000 or you saved $100,000 or whatever. You got $100,000, and what I like to create is models. I don't want to tell you what to do. I just want to give you a way to like think about things. So what I did with this $100,000 is I divided it up in 5 different asset classes. So usually when people are talking about diversification, they talking about diversification amongst stocks. So they saying you diversify by having your money in stocks in this company, that company, and that company, and that company. But what happened if the stock market crash and you're in stocks, but you're just diversified in stocks? You're just in one asset. So what real diversification is diversifying yourself in different asset classes. So I'm gonna take this $100,000. I'm gonna put $20,000 in savings. I got $20,000 in cash. That I got cash in my pocket. I got $20,000 in real estate. I got $20,000 in stocks and bonds, and I got $20,000 in gold. So basically, you want to be looking at the rate of return on different asset classes each year to get an idea how to mix your money up. And this changes from year to year all the time. You know what I'm saying? Like, so you got to watch your money. You see what I'm saying? So you can figure out how your money is returning, which is ROI, which means return on investment. How much can I put into this asset and how much can I get back over the span of a year? So we're going to do over the span of a year so you can see how the numbers break down. So I use like the average rate of return in America on these different asset classes. So let's say you put this $20,000 in the bank. So they be saying save, right? Okay, if you put your money in the bank and that's just all you do, you're gonna get 0.9% on your bank account. So over 1 year, that 0.9% is gonna be worth $180. You see what I'm saying? All right. So let's say you just keep it in cash. Remember I was telling you about inflation. So if you just got cash and you hold on to it, every year it's going to lose 0.3, 0.7%. So you lost money over there. You put your money in real estate. Every year, let's just say, again, this is just an example sake, you get an 8% return on your real estate investments. So you're gonna make 1,600 on that. You got your money in stocks and bonds, and that do an 8% return, and you made 1,600 on that. And then let's say you had 20,000 in gold, and gold is strong right now because of what's going on in the market. So you make a 237% return on that. So you make 4 million over here. So that $100,000 after a year turned into 4,822,640. Now remember, that 100,000, if you ain't do nothing with it and just held on to it, it actually lose money. But if you figure out how to strategically invest your money, you can end up like this. You see what I'm saying? So this is the importance of like learning how to like invest and diversify. And like I said, I don't like to tell you what to do. I just like to give you models of how to think so you can figure out what's the best course of action based on your circumstance and situation.